Hello, everyone. Welcome, welcome. I'm really glad that everybody has been able to join us here tonight. This is the Home Buying 101, how to buy a home in Central Florida without stress. Whether this is your first home, your next home, or you're here helping family, you're in the right place. We'll keep this clear, practical, and no pressure. And if you did not hear the warning when you joined us, this will be recorded. So if you have any questions, also, I would love for you to go ahead and put them in the chat. And at the end of the presentation, we'll go over the chat and see what questions you may have so that we can answer them, both myself or Robert. So before we jump in, I want to set some expectations. This is an educational session. Pura educación. You're going to hear some Spanglish, not a sales pitch. There's no pressure tonight, no obligation, no rushing. You can ask questions anytime in the chat, again, in English or in Spanish. I'm Johanna Chandler. I'm a realtor. I'm also a broker associate with LPT Realty. As you can see, I live in Eustis. I've been a local for about 24 years. I've been helping families buy and sell homes for about 8 years. Some things I'm proud of. I've sold real estate all the way from Daytona Beach down towards Naples. I'm also a seniors real estate specialist, which means that I can help individuals that are possibly moving to assisted living facilities or looking to downsize. So again, geared more towards seniors. If you have any questions on my background, feel free and just go ahead and put them in the chat. Next is Robert.
Hello, everyone. So I've been in the mortgage industry for quite a bit. I bought my first home back in 1998, own a lot of rental properties. I was originally a stockbroker and started originating mortgages back in 2004. So I've originated over 250 million in loans, helped hundreds of families. Also, first generation, originally from Panama. So definitely have a lot of probably half my clients are Spanish speaking. To give an idea, some things I'm proud of course, my family. My real estate is, whether it's me renting properties, buying something, and repairing it, renting it, or flipping it, or whether I'm doing the mortgages all day long. I breathe and live real estate and mortgages. Is all I do, is all I think about, just about. So this is very close to my heart. I work a lot with veterans, first-time home buyers, self-employed folks, and I'm excited to be a partner to Joanna and her team.
Thank you, Roberto. So he is definitely someone that I work with, and some of my clients have been successful in acquiring homes through his services. So, definitely someone I would recommend and part of my team. So if you're in this class, you're asking, okay, like what exactly are we going to learn? So this class is intentionally broad. Um, Sorry, let me admit one more person into our class. So this is intentionally for first-time home buyers again that are purchasing again. That for us in the real estate business, this is something that we do every single day, and we're involved with it. So some individuals may do this once every 7, 10, 15, possibly 20 years. So the process is always new and certainly ever changing. So also with families that are helping adult children or anyone planning to buy within the next 6 to 18 months. So if you're just gathering information, that's just perfect. That's exactly who this is for. So let's warm up the chat for a moment. Type in the chat what best describes you. Are you a first-time home buyer? Are you looking to buy again? So, no pressure, just curiosity. Just want to have you guys be more involved in terms of the chat. So, okay, now let's get started in terms of what we're going to be learning today. So I want you to take a look here. and tell me what are your thoughts. Throw them in the chat, give me your opinion, but don't forget, put in your answer so that everyone can see it, not that just I can see it. So, what do you think that you'll be walking away with? Are we going to be walking away with a clear home buying roadmap, a local market info, how to budget for all costs, so forth and so on? Go ahead and put it in the chat. What you're really going to be walking away with is pretty much everything that you just saw. If you said everything, then you were definitely correct. So I want to show you exactly where we're headed tonight so nothing feels overwhelming. We're going to start walking through the entire buying process step by step, then a quick look at what was happening here in Central Florida. So we'll also talk about some budgeting, and because a lot of confusion starts when we're thinking about budgeting. So here's another question for you. Throw that again in the chat. What feels most overwhelming when we're looking at buying a home? So if you answered any of these, well, here's the good news. Most stress doesn't come from the market. It comes from knowing the process. So once you understand each individual step and the numbers, buying feels much more manageable. Roberto and I are going to go over these few next slides together with you. I can't stress the importance that when you're choosing your lender, they are open and transparent with your real estate agent. Whenever you're working with them, it's always in partnership with your loan officer so that you guys work in tandem and you get the best service from both. So this is, another question for you guys to answer, true or false. Do you need a 20% payment to buy a home? Anybody? Throw it in the chat. Is that something that you must need? Wow, you guys are definitely on it. So it is a myth. You do not need 20% down. Many buyers put down 10 to 15% with certain loan products. As you can see, down payments can be as low as 3 to 5%. One of the things that you will hear from Roberto coming down the pike is certainly how you can get to those different areas. What are our loan packages that you can potentially get? So besides the down payment, what else do you think buyers need to pay for? Can anybody else put it in the chat? What do you think that buyers need to put in there? Right. Okay. So here's an important question, right? What to budget for? This is the important thing. So, Mark, you are correct. Certainly, closing costs are part of it, and that's usually about 2 to 5% of the purchase price. And then something else is inspection and appraisals, and that can run a few $100s, prepaid taxes and insurance, so forth and so on. So we'll go over that with you. And actually, we are going to have Roberto explain all those beautiful things in terms of all those additional expenses.
So we have two terms that we're familiar with as far as down payment, escrow amounts, closing costs, and additional expenses. So additional expenses would be things that may a lot of times be paid up front, such as home inspections. So if we're buying a home, we want to make sure the house is in good shape, able to finance it, for example. That's something where we would have a general home inspector inspect the home. We also need to make sure the valuation for the house is there. The house is worth what you're paying for the house. That's where your appraisal comes in. So those are pretty much mandatory in just about any loan that you do for any home that you're purchasing. As far as total closing costs, there's title fees associated with, there's taxes, there's insurance. So the 2 to 5% range that we show here is a wide range, but generally speaking, a lot of our closing costs are fixed in general, no matter where you do a mortgage or a loan. So usually the more expensive the home, the smaller that percentage is, the less expensive the home, since the closing cost, let's say for $1 million house, might be the same. Your appraisal for $1 million house might be $600. If the house is 300, that's still 600, right? So that's why sometimes you'll see on a lower price home, wow, my percentage was 4%, and someone else says, oh, well, mine are 2%. Well, yeah, they bought a $500,000 house. But these are things that As we go into the process of pre-approving you, we'll show you a breakdown in writing, so you understand what those fees and costs are.
Perfect. Thank you. Here's another question. What factors impact your mortgage payment? Anybody want to take a guess? Well, go ahead and answer it. Roberto is going to go ahead and educate us of all those different pieces right there. I know that this is going to be a big one, and everybody has questions on this one. Go for
Mhm.
it, Roberto.
Definitely. So a lot of things go into your payment. Many of them make sense. The price of the house, the interest rate. But to get to, for example, the interest rate, that depends on the program, that depends on your particular circumstances. Many times when you go to a direct lender like a bank, credit union, or even a mortgage broker, when they may only have maybe a couple of lenders they work with, they pretty much only have a few programs. So they try to fit you under. Really, a mortgage is something that needs to be structured, and it should be structured precisely for that particular individual. So for example, there's some programs where there's income limits where you know may not be able to participate because you make too much or too little, where other programs have different limits, right? So you have to be able to fit the client in those categories. So your job history, how you get paid, the type of income that you get is not just money. If somebody makes the same amount of money with commission on in the underwriting world when we originate a loan, that could be looked at very different from lender to lender. For example, your credit score and your credit profile. To give you an extreme example, wow, I heard a 750 is a great credit score. Well, I just turned 18, got my first credit card a few months ago, made two payments, I got a 780 credit score. Well, you don't have 2 years of history in credit, right? So just because you have the credit score, you also need the credit profile, and that's something that we work with a lot with clients to make sure that some clients are ready to go today. Some need a month, 2 months. Some need a little more time, and that's what a pre-qualification is to basically figure out when you can start. Debt to income ratio. You'll hear that term at all. Excuse me, a lot, and it's precisely what it says. We're going to take what your debt is, in other words, what your mortgage payment is going to be, along with your, let's say, student loan, car payment, minimum payment on credit cards, and divide it into the income, usable income that we have from your income sources. And that gives us a particular ratio. And that's different for every program. So, once again, that's another factor that we have to fit into the particular program to get you qualified. Down payment and savings. I can tell you in all these years, all the loans I've done, there's some people that come out of pocket with only a few $1,000s, if not less. If you have a program where it's 100% financing, where you don't need a down payment, we still have to work with the closing costs, right? But generally speaking, there is going to be a need for money, whether it's down payment, whether it's a gift, a 401k savings, or seller contributions. Generally, some sort of money is need. The big question is, Roberto, how much I need? That depends on your circumstances. Again, that's where the pre-qualification comes in. The different type of loans and interest rates for every individual is going to be different. Well, I got a first-time home buyer program, and my rate is 6%. Somebody else could be 5.8. The next one's 6.25 for different reasons. But obviously, that also goes into play as to what the interest rate is. And then the last one is property taxes and insurance. That's going to affect us all equally, but it does affect your payment, of course. Ultimately, at the end of the day, we put all this together, and depending on the particular individual, we structure the best mortgage with the best possible terms, to be able to generate what that mortgage payment is.
Thank you.
Go ahead, Joanna.
So another question that people ask during this whole mortgage situation is, what does my credit score impact? So here's another great slide and great information that Roberto's going to go ahead and go over.
Thank you, Joanna. So definitely credit is one of the items that we look at very diligently when originating a loan. Again, it's like we mentioned before, not just the credit, but the credit profile. But in most cases, folks that have, not everybody has a perfect credit score. And I can't tell you how many times I come across someone that says, well, I finally had a 650 credit score, or I finally have a 600 credit score, or whatever the case is. And now I'm able to buy the house when they could have bought the house even with a lower credit score. You may have someone with a 650, I cannot buy, yet you got someone across the street with a 580 that they're ready to buy today. There's a little bit more to it, right? Of course, the better your score is, the better your credit profile is, the better terms you're going to get. But I always tell people, don't let a particular score hold you back. Let's review where you are, because that's only part of the picture. If somebody else wasn't able to get a loan at a particular credit score, doesn't mean that that's your scenario. But definitely, credit is big in the lending world. Go ahead, Jonah.
Well, that brings us to the next question. How do lenders actually look at buyers?
So income, credit, debt, and assets. So lenders look at buyers pretty much from a risk perspective. Is this person has stable employment, for example? Well, I have 5 jobs last year. Well, you can't, that's not really what we're looking for, right? As far as the income, I want to see what capacity they have or probability of making that payment. Nobody's got a crystal ball. We don't know what's going to happen in the future, but I want to make sure that we have enough income to cover not just the mortgage, but all your debts that you would have on your credit. Of course, there's got to be money left for food, insurance, all that. So we crunch all those numbers for you. But income is definitely something that we look at, and how you get that income is verifiable as well. Debt is really important to us naturally, because now you're responsible for, instead of paying rent, you're going to be paying mortgage. And that's usually a place where I start. How much rent are you paying? And this is what your mortgage is going to be. Can we make that work? Does that make sense? And then assets, as we mentioned before, assets are a big part of financing as well. For first time home buyers, maybe not as much as someone already selling their house and buying another one, but generally there needs to be some sort of assets in some way, shape, or form, whether it's for a down payment and or closing costs.
Thank you. What actually makes up a monthly mortgage payment? We're talking about, okay, how do we qualify? And now we're talking about the mortgage. So, what exactly makes up a monthly mortgage payment, Roberto?
Got it. So specifically, principal and interest is the biggest. So an amortization is we're borrowing X amount of dollars and we're paying so much principal and interest every month. As the months go by, you pay more principal, less interest. Property taxes. I know there's a lot of commotion on that on the news right now, but as of now, we have to pay property taxes. That's going to be part of your mortgage payment, as well as home insurance. So we want to make sure the home's insured to get the, not just to get the mortgage, but if obviously something happened to your house, you want to make sure you're covered. Now, the homeowners association, that's generally not part of your mortgage payment. In most cases, it's not. I would say 98% of the cases it's not, but it is going to be a monthly obligation that we have to qualify you with. But generally speaking, again, principal and interest, the property taxes, the home insurance, that's in 90% of the cases going to be part of your mortgage payment. So you don't have to pay those things separately. So to all taken care of for you at one payment.
Okay. So let's talk about what should I absolutely not do before buying a home. So now you're talking about savings and I have to watch my credit, but what should I absolutely not do?
A lot of these things, once we learn the process, makes sense. But before, it's just like anything else. Before learning the process, it doesn't, right? I can't tell you how many people I've had on the phone where it said, well, we just finished, we're self employed and we just finished doing our taxes. Now we're ready for the mortgage. Or we just got rid of our old cars, bought brand new cars, got really good interest rates. Now we're ready for the mortgage because they wanted to get that out of the way. I really needed to get in touch with them before they made those moves, right? But, opening up new credit cards, you have to have a credit pool. Your credit is very dynamic. Just because somebody pulls your credit doesn't mean that you lose points forever. You lose them temporarily, you get them later. Just like when you get a point, you don't keep them forever either. It's very dynamic. But anytime you're opening more debt, anytime you buy a car, obviously, if you miss payments, that's going to lower your credit score. And even if it doesn't lower it too much, that could affect your approval. And then move money without advising. Anytime there's a large movement on money, my processor callers, we have to go through the Spanish Inquisition. The things we do want to do is, if we're looking on purchasing a home, maybe this is not the best time to switch jobs. Sometimes it is, but that's rare. Save all your documents. Anything and everything that we do, especially when it comes to buying or selling or moving money around, everything has to be documented. And then if you are going to make any sort of movements, definitely give me a call first, and then run it through a loan officer, if that makes sense.
So, quick question. Let's say, for example, I'm going to be short on, let's say, a down payment, and I'm going to have a family member go ahead and give me, I don't know, $10,000. Is that money,
Mhm.
can I go ahead and deposit that money into my bank account, or should I wait and talk to you first?
I would always recommend wait and talk to me because there's easier ways of doing that where will require more documentation. But with very few exceptions, mainly when we're talking investor loans, in 99% of the cases, gifts are allowed. However, there are gifts that, or some programs where gifts are only allowed, for example, from a direct family member, not my cousin, not my best friend, right? So now you already deposited the money. So now we can't use that money, at least not for 2 months, 3 months. So, a lot of times there's anytime you're going to make anything, any type of large movement or anything like that, obviously, if you want to get with the loan officer to make sure you do it the best possible way. That's not a deal breaker, but it could change things for you. But yeah, in most cases, gift funds are allowed.
Okay, excellent. Thank you. Thank you for clarifying that. Now,
Sure.
Naniche, I think that you had put down this question, like, what is the difference? So here we go. What do you think a pre-approval actually is? Like, is it a permission to shop, a commitment, or I don't know. What could it be? Go ahead, Roberto. Give us a little understanding between the difference between a
Mhm.
pre-qualification, what we would call, or a pre-approval.
Definitely, absolutely. This is a huge one and one of my pet peeves. So, unfortunately, in the industry, sometimes these are used inversely, but the proper definition of each one, a pre qualification is Roberto, I have a 750 credit score. I have $25,000 in the bank. I make 60,000 a year. My wife makes $75,000 a year, and we're looking at a house of $300,000. And we're currently paying about $2,500 in rent. We kind of want to keep the payment about the same. Well, in my head, that sounds, hey, if that's the case, you're well within the ballpark. You should be able to, you know, get a loan. So I'm doing the loan application on the phone, taking the information over. I type those things down. I do maybe a soft credit pool, or maybe I even do a regular credit pool, and it looks okay. But I have not verified. I don't haven't seen any pay stubs. I don't have the bank statements yet. I don't have an actual approval on the system. That's a pre-qualification. So if you qualify for a $500,000 house and you're looking for 350, pre-qualification may be okay. But the closer you get to the amount you actually qualified, the more important a pre-approval is. The way I look at this is, to me, a pre-approval is almost as good as a cash offer if it's done properly. We don't do pre-qualifications. All we do is pre-approvals, which means when you have my seal of approval and you go out there after 30 years of doing this, just about, people know that your loan is done 100%. And a lot of times that helps capture that offer. So a pre-approval means we actually completed a loan for you. If we had a house, you'll be ready to move forward and write the contract and get everything started. So a pre-approval is we actually verified the employment. We've seen documents, we've calculated income, we've verified whether it's child support, alimony, whatever the case is. If we had credit repair to do, we already completed that. We already got the credit where we need it. The only thing that we're missing
Well, I
is the
think
house and
you're
the contract.
answering our questions while we're going through here as to how is my pre-approval calculated. Go for it.
All right.
You
I'm
are
getting ahead of
going
myself, I
ahead of
guess.
it.
Yes, definitely. I told you I get excited about this stuff, right? I'm a mortgage nerd. What can I say? So, how lenders calculate your pre-approval amount? So we gather all the numbers, we look at all the different programs, we structure that particular program for your particular need. Let's just take it as an example, an FHA loan. Well, that could be 3.5% down payment. That could be a 10% down payment. That could be, Roberto, I'm only going to be in this house 3 years. Then I'm moving to the West Coast. Well, maybe we'll do a 5-year mortgage instead of a 30-year mortgage. Could be a lot of different things. The lender estimates your maximum housing budget. So that's when we look at all your income, what all your debts in, and what is the highest mortgage I can fit in there. And I need you to know that even though you may not want a $4,000 payment, that's what you qualify for.
Mhm.
So as long as you're finding a house where your payment is under that, you're in the green, right? So that's super important because basically you don't really get pre-approved for 350, 380, 550. You get approved for a mortgage payment. But if I give you that payment, you really can't monetize that, right? So I'm going to translate that into what that price of that house would be. And then we got to look at the individual houses, of course. As you're looking at houses, if you qualify for 500,000 and you're going to see 4 of them this weekend, there might be one for 520 that you qualify for and one that's 480 that you don't qualify for because that one's got higher taxes and let's say insurance, for example, right?
Right.
And then
So
the
there's
last
all
thing
these
is
different pieces that'll go ahead and say,
right,
okay, what can I actually qualify or be pre-approved for?
correct.
Okay. Now, we're ready. We're interested. I've got all of my, quote unquote ducks in a row. Now, this is something that certainly makes people nervous is all the crazy paperwork, right? So loan approvals in Florida, most buyers, are asked for a few common documents and, we're looking at recent pay stubs, W-2s, tax forms, bank statements, photo ID, and proof of any additional income that you may have. Maybe you have a little side hustle or, you're working a second job. So in terms of pay stubs, Roberto, how many pay
Mm-hmm.
stubs? Do I have to go ahead and get 5 years worth of pay stubs? What do you need from me?
In most cases, we're just going to need 30 days worth of pay stubs. So if you get paid, you're a soldier, you get paid once a month, that's one. If you get paid weekly because you're a plumber, then I need four. But generally, 30 days worth of pay stubs is what we would need if you get paid with pay stubs. Not everybody does, in most cases.
Okay. And how about my W-2s? You need 10 years worth?
Nope, only 2 years. Some cases, only 1 year.
Okay, perfect. And bank statements?
Anywhere from 2 months to sometimes 1 month. There are programs that you've heard, bank statement programs, where you calculate the income based on that. That could be 12 to 24 months. But again, in most cases, you're going to need for any accounts that we're going to use in the transaction, just 2 months bank statements.
Okay, perfect. Well, another big question is what loans are available to me? Like, does anybody know how many different types of loans are available right now? Just drop it in the chat. If you guys can give me, an answer. Is there one type of loan? Is there five? Is there 20? How many loans, different types of loans do you think are out there for buyers such as yourselves? Love that. Too many? Well,
I
I
think
mean, here
Luke may be a loan officer. He said too many to count.
So, Roberto, go ahead and tell us about, these different little packages that
Mm-hmm.
we have available.
Got it. So the four different types of loans that you see on here, I would say this is where probably about 75 to 70% of the folks are going to fall into, whether you're a first time home buyer or whether it's your second, third, fourth home, or whether it's an investment property or even a second home for vacation. So we have your federal housing administration loans, which is a government sponsored agency where usually most first time home buyers, about 85% of home buyers, for a lot of reasons, fit in here. But you don't have to be a first time home buyer to participate in an FHA loan. Conventional loans generally would fit in somebody with excellent credit, even though the requirement for the credit score is lower, really to be able to have decent rates and a fairly low mortgage insurance. Generally, clients with better credit scores fit in that category. Of course, for our service members, active service members, or veterans, we have VA loans from Veterans Administration. So that would apply to those folks. And then we do have probably about, believe it or not, about 95% of the country qualifies for USDA, meaning 95% of the area. However, these are rural areas. So we have a lot of people in Central Florida as you go far out in those places between Central Florida and the East Coast where nobody lives. A lot of times those are USD areas. But that's always something to look at because, the rates are low and just like the VA loan, you don't need any down payment amount. So those are pretty good.
Well, I mean, that goes into our next slide when we're talking about loan options and down payments, right? For FHA, as little as 3.5%, conventional starting between 3 and 5%. And like he said, VA and USDA, you really don't need to go ahead and bring down payments. Do you want to go ahead and expound on this, Roberto?
The only thing I want to touch base on this particular slide is that all of these loans will have closing costs approximately the same, if not almost identical. So a lot of folks, I get a lot of veterans, for example, I say, "Hey, I want to do a VA loan. I know it's 0% down payment, and then the house is 400,000. Well, you got about 12,000 in closing costs. No, 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 no. Its down payment is zero. Yeah, the down payment is zero if you qualify, but there's still closing costs involved with all these.
Right. Okay. Thank you. So,
Mhm.
another big one is this mortgage insurance. Everybody talks about PMI. What is this mortgage insurance? Tell us a little bit about this.
Definitely. So I'm not to just read off the slide, but usually what once again I get a lot of folks over the years. Hey, I need to save another 30,000, then I can avoid the mortgage insurance. And then I just sit there. Okay. So you're looking to avoid a payment of $120, and then you're gonna wait 30,000. Let's say until you have another 30,000. What do you save in a month? Well, I save about 500 a month. Okay, so you're gonna wait 5 years for that. So what mortgage insurance does is, in a lot of cases, it's temporary, but that's what allows you to buy a house without having to have that 20% down payment. And in some cases, there are programs where you can have less than the 20% and still not have mortgage insurance. If you have excellent credit, sometimes you can just pay up front a couple of $1,000 and now you don't have the mortgage insurance. Once again, I think it comes down to making a decision based on one factoid you got from somewhere that might apply to that person that doesn't apply to you, and really making a decision not having all the information. But I think if it wasn't for mortgage insurance, we would have a lot less homeowners. It's probably one of the best things out there to have that.
Right. And it would be a small number in terms of the payment, your monthly payment in comparison to being able to bring in the extra $30,000.
Right, exactly. Again, that's when we talked about earlier about credit. That's where credit has a big impact. If you're doing just a quick example, it's a conventional loan. If you're buying a $500,000 house and you're doing a conventional loan and you have a credit score of 670, that
Hmm.
might be 400 a month. In that case, I'll put you in FHA because that'll be about 220 a month. But if you had a 760 credit score, that might be $80 a month. So it
Hmm.
can be very different for a lot of folks.
Right.
That's where having different programs, being able to be a broker or do direct loans and having all those options comes into play. So we can structure precisely so it's the best program for the client. One quick point to make on here: a lot of folks always look at just one thing, the interest rate. Well, if I have the lowest rate, I'll have the lowest payment. Well, what if you have a 750 credit score and the lowest rate is FHA is 5.8 right now? But if I put you in a conventional loan, since you have that credit score, your mortgage insurance is only $70
Hmm.
and your rate's a tiny bit higher. So your rate's going to increase your payment maybe $50, but I can send you 150 on the mortgage insurance. That's $100 payment. That payment is $100 less, even though you have a higher rate.
Right.
So once again, there's a lot of moving parts to it, but mortgage insurance is one of the things that definitely has been able to get Americans to have the home ownership levels that we have.
Right.
So don't let that scare you.
And
Mhm.
I've had buyers that do have the money for the down payment, have that 20%. And after
Right.
having a conversation with you, their lender, they decide, oh, I'd rather go ahead and go into the PMI and be able to purchase a little bit more home than
Mhm.
putting down and putting all that money down.
Yeah. I've had clients that did 10% so they can now have enough to buy an investment property and end up with two houses or buy more
Exactly.
house, like you said. So, right. I think ultimately the client makes the decision because ultimately it's their money, right? So they know their money best. But I think it's up to us to give them all the options available and illuminate them so they can then make the right decision as opposed to making the decision on gossip or something that's online somewhere.
Exactly. Exactly. Thank you. So, what about these down payment assistance programs? Everybody talks about that and says, hey, there's these government programs that give me money. Um, Talk to me about that.
Sure. So just like everything, there's always a good side and maybe not such a good side of everything, right? So once again, we're going to come back to the same thing. Is really the best program for you? Roberto, I got $5,000 in the bank. The
Mm.
seller's not paying any closing costs. We need down payment assistance. End of conversation. That's it. But if you have the option of taking or not taking the down payment assistance, that's really when we want to look at those particular numbers. So I have, generally speaking, when we're purchasing a home, is a long-term investment.
Right.
So as recent as yesterday, I had a phone call from a client who's looking to sell their house, which they bought only last March. And now they're looking to sell the house. Well, they got down payment assistance program. So the program gave them $34,000 to be able to purchase that home. And they don't have to pay that money back until they refinance or sell.
Mhm.
So if they sell the house today, they have to sell it for almost the same amount. So now they have to come with money out of pocket, right? Now they didn't know this was going to happen, of course, right? But
Right.
the point is that down payment assistance programs help a lot of folks buy homes. And for a lot of folks, is the best thing since sliced bread. But I can't tell you how many times I've seen someone, oh, I want to participate in down payment assistance, and then when I show them the different programs, sometimes they choose not to. On the contrary, I got people I got $100,000 in the bank and they want the down payment assistance program because it fits their particular circumstances.
Right.
So again, no guessing here, but down payment assistance programs helps get a lot of folks into homes.
So, talk to me about hometown heroes because I know that that's something that we have
Mm-hmm.
here in Florida, and it's somewhat similar to down payment assistance.
Mm-hmm. Got it. So it's definitely another type of down payment assistance program specifically designed this year. It comes out every year, usually once, sometimes twice a year. We've had it for about 6 years now. And there are differences from year to year. So last year, if you're a first time home buyer, with the exception of veterans, you could participate. You just needed a job in a heartbeat. Now this year, we're back to the heroes, which is what it was originally designed, where you have to have a participation in one of the industries that they have with many different jobs. Some of them are obvious. Public service members, teachers, police. If you're in the medical field, if you work at downtown Orlando Health and you're the receptionist, well, you're not in the medical field, but you do work at a hospital, you qualify, for example. But basically, in a nutshell, what the program does is it gives you 5% of your loan amount and allows that to be used towards down payment assistance. So, for example, let's say you have a $400,000 purchase, and for whatever reason, the program that you fit in requires 5% down, which is $20,000. That means that your loan amount is going to be $380,000. So then we take $380,000 multiplied by 5%. So that's $19,000 that you can have towards that down payment or towards your closing costs. Well, we know the down payment is 20,000, right? So really you can buy the house with just $1,000. And then Joanna, since you're an amazing negotiator out of the hundred of agents I've worked with, you're able to negotiate, let's say five, seven, $8,000 in closing costs. That person can buy a $400,000 house with, gosh, maybe 4,000 out of pocket. That's a pretty good deal.
Mhm.
That's a pretty sweet deal. So that's definitely available out there for a lot of folks.
Now, is that also money that I have to go ahead and pay back if I decide to sell the home?
Super, super good question. So on that particular program, let's fast forward 4 years. Joanna, guess who called me? Amy, who back in 2026 bought that house for 400,000. And you call Amy and you say, hey, Amy, I think we can get let's say 520 for your house. But when we sell the house, you're not gonna have 520 to pay off the mortgage and put money on the next house. We're gonna have to back out those 19,000 that you borrowed at the beginning. The good thing of that money is that you're paying zero interest. It is a second mortgage, but you don't make any payments on it. You don't pay any interest on it. So if you live in the house 30 years, you don't have to pay it back. If you end up selling the house or refinancing the house, that's when that money has to be paid back.
Okay.
So, that's why it's designed mainly for primary occupancy, if that makes sense. Live in the home.
Right. So only used to for your primary home, not for an investment
That's right.
property. Okay.
Correct.
I think that answers one of our questions here for Lewis. What questions should I ask my lender? Oh my goodness. Everybody is like, I'm about to talk to this lender. What do I ask? What are the different questions that I should be asking? So certainly go down this slide, but what loan programs do I qualify for? So that's
Mm-hmm.
by getting all of the information that you need to be being provided to your lender. Can you provide me a written estimate? What will be my total monthly payment? Obviously, that's a conversation that you'll have with the lender.
Mm-hmm.
What are your lender fees, right? What are estimated costs? Nobody does anything for free. So,
Gotcha.
how does it typically, how long does it typically take to close in terms of a loan? Do you want to add anything here, Roberto?
No, I think it's a pretty good summary that we have on here. Generally, I would tell you what lenders look for in this, or what you want to ask lenders is, or tell the lender is precisely what you have in mind. A good lender is always going to want to know, other than obvious. So why are we buying a house now? Why not last year? Why not next year? What has you motivated? Tell me a little bit more about the story. Everybody just, oh, I want to buy a house in this neighborhood for this amount of for this price, right? So tell them the story. Why are we doing this? Well, I got triplets on the way. Whatever the case is, because a lot of times that's where we circle back to get to the right program, if that makes sense.
Right.
You have to have clarity and transparency. That's the one thing that a lender's always going to look for. You want to disclose everything. The more disclosure you have, the better program you're going to have, the easier process you're going to have.
Okay. Thank you. So we're ready to
Mhm.
put down the offer. We've gone house shopping and we already found that dream home. You're ready to invest in real estate. When it's time to write an offer, what do you think matters most, everyone? Is it price? Is it terms? Is it timing? Go ahead, throw that in the chat. Tell me, what do you think is the most important when we're ready to go ahead and put in an offer? Okay, excellent. So take a look here and tell me what your thoughts are here. I mean, throw that in the chat. Don't forget to put your answer to everyone so that everybody sees it. But the most important thing is it your earnest money deposit? Is it a closing timeline, your inspection window? Whenever we're putting an offer, what's the most important thing? Okay. Well, guess what? It's everything. Price matters, but it's not everything. Earnest money, inspection windows, your closing timeline, they all play a role. Every offer is a strategy. So every piece goes with each other. Now, what else can buyers ask for in an offer besides price? Does anybody know what else you can ask for instead of when we're looking at the price and we're looking at inspection timelines? Can anybody guess? Take a little quick guess. What else you can ask for? Yeah, absolutely. So seller concessions, what buyers can often ask for. So here, whenever we as realtors are putting an offer together, this is where the strategy really matters. Currently here in Central Florida, buyers may be able to ask for seller concessions. So these concessions are closing costs, interest rate buy downs. So being able to get a percentage of your closing, of your the price that you're looking to pay for your home, you'll be able to go ahead and get a percentage of that. Or we can say, look, I want $5,000. Also, repairs. Once you go through the inspection period, we can ask for repair credits. We can ask for a home warranty. They have all these great appliances and all of these different things, the AC, whatever. Maybe you don't want to have certain repairs done, but you want a home warranty just in case, and certainly seller paid buyer broker compensation. That's something that we will definitely talk about. What do you think inspections and appraisals are really for? Is it a pass fail? Is it only for negotiation purposes? Is it just to give you some information? What do you think it's really about? Let's pause here for a second. When people hear inspection or appraisal, emotions start going crazy. Like, oh my God, here we go. We're about to go ahead and go through the inspection. So, what do you really think these steps are for? Is it a deal breaker? Again, is it a way to negotiate, or are you just not sure? Can you guys throw that in the chat? Tell me what your thing is. No answer is wrong. Here's how I want you to think about it when we're talking about inspection and appraisal. What does it actually mean? So, an inspection is about understanding the condition of the home. Right. So, when does the AC work? How is the piping? Does that need to be repaired? So anything related to the condition of the home. And an appraisal is about confirming the value. How much is it really worth? So neither one automatically means that the deal is dead, but they do exist to protect you and give you both information about the property and certainly for you to make an informed decision because this is an opportunity for you to decide, do I continue further in purchasing this home? So, problems don't mean panic. They just mean options because while we're going through the inspection report, we can certainly look at ways of what we need to negotiate and have the seller possibly um, repair for you. This is where having the right representation really matters. Both the inspection and the appraisal can open a door for negotiation. So that's certainly another way to negotiate what Lewis had said. Buyers may be able to request repairs. You can ask for credit, renegotiate the price, adjust the terms if the appraisal comes in lower than expected, right? If your home appraised for 300, but the purchase price was 315, then that's a $15,000 appraisal gap that maybe you have extra money that you want to cover, or we just need to go back and renegotiate with the seller and say, I'm sorry, we need to go ahead and bring it down for 300. So what matters most in these conversations is how they're handled, right? This isn't about demanding. It's all about a conversation. And a strong negotiator knows when to push, when to compromise, and when to, most importantly, protect you. So now we're at the closing table, right? We've gone through the inspection, we've gone through the appraisal. Everything has gone wonderful during this whole transaction. We call it a transaction when we're within a contract. So we're at the closing table. What do you need to know? Once the inspection and the appraisal are complete, this is where everything finally comes together. We're at the closing table before the closing day. We're going to review the numbers so that there's no surprises. You'll receive something that's called a closing disclosure, which is going to lay out exactly what you need to bring to the closing table. You'll also do a final walkthrough. You'll walk with your realtor and make sure that the home is of the same caliber, if not better, right? Because it should be clean. There shouldn't be any gaping holes in the walls because they've moved out the furniture, things of that nature. And then on the closing day itself, this is where you're going to sign all of your final documents. Obviously, if you are taking on a mortgage, you're going to have mortgage documents to go ahead and sign. So this is very important. We'll have you wire the funds into the title office. And once all is done and taken care of and you've signed everything away, you'll be receiving the keys. And this part is very important because, during this entire process, you're going to have your agent with you, you'll have your lender with you, the title company is going to guide you through every single document. I mean, there's times where I've sat down through closings and literally the title person goes through every single document, may not read line per line, but explain every single document. And this is so important because you want to understand what you're actually signing. So by the time you get there, there's like no big decisions left. It's all about execution and no stress. Roberto, do you want to talk a little bit about anything in particular that you're requiring any of your clients to bring for closing day?
Generally, I have what I do is a pre-closing for our clients, which is kind of rare in the industry, but if you think about it, we're buying a pretty big ticket item, right? And you really don't have 10 hours to sit there and write. You're really pretty much just signing. So what I do is via Zoom before closing, either 2, 3 days before closing, or sometimes the day before, is I generally will Zoom the entire closing package with the client so they have a chance to digest it. Usually by the time they get to the closing to sign those documents, they actually signed a lot of them at the beginning. Some got re-signed during the process, and then at the end again. So it's a little dilatory, but it's a lot of information. So I want him to be as relaxed as possible. One of my goals is when my clients are at the closing table, yeah, Roberto told me this. Yeah, Roberto, and that makes me look real good in front of Joanna. So that's something that I'm definitely I want him to have that good experience at closing. I feel that sometimes that's what people remember the best, and it'd be a shame to have such a good experience that you and I usually go through, Joanna, only for him having them at the final closing table and then having to feel rushed signing documents. So
Right.
that's my 2 pennies. Yeah.
All right, thank you. Here's the next thing. If you're buying in the next 6 to 8 months, what should you be doing right now? Does anybody know what you should be doing right now? Go ahead and throw that into the chat. Let me know. What do you think that you should be doing right now if you're looking to buy within the next 6 to 18 months? Well, let me tell you, you need to be starting to create a plan. Yeah, preparing financial documents. That's right, Luke. So, the smartest thing that you can start doing is creating a plan. Stop guessing. Let's actually sit together and put a plan together. Planning early gives you options, it reduces stress and puts you in the driver's seat, puts you in control. So, talking to a lender sooner rather than later, I say this to all of my clients. Oh, I'm thinking in about 6 months. Well, you need to speak to a lender and they would be able to guide you what you actually need to prepare. Or you might surprise yourself and know that, hey, I'm ready to go ahead and purchase right now. Isn't that right, Roberto?
That's right. Everybody has what I call a different incubation period. You'll have the folks that think they need a year and they're ready now, and some that think that are ready now when they're not. How are you supposed to get ready for something that you didn't know you had to get ready for, right? So getting in front of that pre-qualification and pre-approval as soon as possible doesn't mean that you're ready now, but now you have the roadmap. Hey, to be able to buy a house, congratulations, you're going to be able to get there, but we need to take care of these two items, and that's going to take 2 months or 3 months or 6 months. In the meantime, why don't you do this, and that with the credit so we can improve that because you qualify with the credit now, but maybe I'll be able to get a better credit score since we have time. So the sooner you do it, the better it is. Definitely before, if you're self employed, please, before doing taxes, completing taxes, definitely reach out. And then, of course, if you feel that, hey, I'm thinking of buying a house in the next year, 2 or 3, but I really need a new car, then that's when we're going to have that conversation to make sure that we can help you plan. Otherwise, how are you going to plan if you don't know how to take the steps, right? So
Everybody's thinking like, okay, what does Central Florida look like? What does my market look like? So this gives you a little snapshot as to what Central Florida, and again, this is like 3, 4 counties put together in Central Florida, Volusia Lake, Seminole, Orange, and Osceola. So we're looking at a medium home price between 380 and 420. So this is what is median. Typical days on market for homes of this range, we're looking anywhere between 40 and 70 days. I can tell you that within the last 2 to 3 weeks, Homes have actually gone, under contract within a week. There's buyers now coming back. So things are changing in terms of that 40 to 70 day. It might be shrinking. So I don't want you to look at, let's say, Zillow, and you're looking at a property, and that property is like, oh, that property has about 30 days. It'll still be on the market later on. We'll go ahead and look at it later. If you are looking at a home and you really like that home, guess what? There's probably 5, 10 more people that might really like that home. So the sooner you get out there and see if this home is for you or not, that's what I would suggest. When we're looking at down payment trends, first timers often 3 to 5% down. Most buyers put anywhere between 10 and 15% down. Repeat buyers can put a little bit more down because they may have a home to sell. So, or a home that they've sold and they have, this great equity that they've built and they're able to go ahead and put a whole lot more. I mean, I've seen some people put down close to 50% down. So, those are all different options that are available right now here in Central Florida. So, let's go through these questions together. I don't know if I've missed some. I've been looking through the chat while we're going through the presentation. So if there's anything in Spanish, I can definitely answer it in Spanish. So I'm just going to go through the chat right now and just see if there's any questions, or feel free and throw something in there. I think we answered a lot of these questions. What's the difference between pre-qual and pre-approval? Alejandra asked escrow account. I don't know exactly what you meant by that. So if you could reframe that and put it in the chat, that would be great. Hometown heroes for a primary home. Yes, it is. We covered that. How many miles do I need to be away? Well, I think Roberto answered that for Luke, but USDA has a map, and within those areas will say what areas are approved for
Mhm.
USDA loans.
Right. Yeah, I'll give you a side item look on that link when you click it. It's a little link on the top left-hand side, single family housing guaranteed. You need to
Mhm.
click that, and then it'll take you to a page where you put in the address, and it'll actually show you the map with a little dot where the house is. Sometimes across the street, you qualify. On that side, you don't. But yeah, that's a very useful site
Okay.
for that purpose. Mhm.
I'm looking here for Luke, where you're saying, are there other sites that I should be looking at, or is Zillow a good place to stick to? Luke Pinkman, I will go ahead and send you a personal link, and we'll go ahead and talk together about what areas you're looking at. Because you and I are currently working together. So I'll go ahead and send that off to you so that you have a link from me instead of going through Zillow, because you and I will be able to talk about exactly what it is that you're looking for, and we'll go ahead and modify that for that. Nanichi says, what about self-employees? What are the requirements? Mr. Ricardo, Roberto.
I get that from you time to time. That's funny. So, Anichi, so self-employed is it is one of my specialties. I've been self-employed all my life. That's probably part of why. But generally speaking, really depends on your circumstances. I think in most cases, most of my self-employed folks take advantage of all the tax breaks allowed to them by the IRS to be able to generate the most cash flow for your business and take advantage of all the deductions. However, if I look at those tax returns, sometimes my self-employed folks do not qualify for a lot of house, especially the house they want. So what we do in that case, we switch to other types of programs, asset depletion. A lot of self-employed folks use bank statement programs where I'll take 12 months of bank statements. I look at all the deposits for your business, and depending on the business, I'll minus an expense factor, if that makes sense. And it's rare that you cannot qualify someone based on bank statements. So those are different type of programs. Obviously, you can use that in participating in down payment assistance, but most of my self-employed clients that I've had over almost 20 years doing self-employed people usually fall in a category other than your regular conventional FHA VA type loan. But
Okay.
there's a lot of options for you.
And then Alejandra put down, I want to buy a second property. How much will be the down payment for the second property?
So depends, Alejandra. Is this a second property, like an investment property, a vacation home, or you're buying your second home to move into? Um, so it really depends on occupancy, right? If it's your next house that you're buying, you're gonna rent the first one. Okay. So in essence, you're buying another primary residence. So think of risk. If I'm lending you money to buy a home, and I know that's where you're gonna live with your family, that's probably going to be a lower risk than if it's let's see, a vacation home. Things get tough with money, you may not pay that, right? Or an investment property. So generally, if it's a house you're going to move into, then you're going to have the pretty similar terms to what you had at the beginning. You may not be able to get down payment assistance, but you should be able to buy that house with 5% down payment. If it's at a far enough distance, you may be able to do an FHA loan. So it really depends. But in that scenario, usually primary residence is really the occupancy that we're looking at. And by the way, that's how I've acquired all my homes, with the exception of two. Most of them, I lived in them close to a year and then bought the next one, lived there a year, then bought the next one, and so forth. So, good question.
Okay. Thank you.
Mhm.
So we're looking at next steps. What is something that you need to do after having all of this information on here? So if you'd like clear, personalized plan for your situation, whether you're looking to buy sooner or later, I offer free buyer planning calls, no pressure, no obligation, just going through some information. Roberto is available to do the same thing. If you are not in the local Central Florida area and you're interested in buying a home in Jacksonville, definitely give me a call and I will find someone for you that can help you in Jacksonville or Fort Lauderdale, wherever the case may be. So I want to thank you so much for spending this evening with me. I know that time is very precious. Everybody who has been here on our meeting, you're going to receive a replay and a checklist that will help you get ready as to what you need to have in order to purchase your next home. So I appreciate you being here and thank you for listening and hanging out with me on this very cold evening in Florida.